Hi there, I'm from FVAS, and today I'll walk you through appealing an HMRC AI-flagged audit decision step by step in 2026.
Hello and welcome. This guide comes to you from the tax advisors here at Fairview Accounting Services. Today, we're tackling a topic that's becoming a real issue for many UK taxpayers. What on earth do you do when HMRC's AI flags you for a compliance check? We're going to break down the exact steps to appeal that decision. So let's dive right in. Right, just imagine this for a second. You're just starting your day, maybe grabbing a coffee, and an email from HMRC lands in your inbox. It's a compliance check. Instantly, your heart just sinks. It's a really stressful situation that, honestly, more and more freelancers, company directors, and small business owners are facing in 2026. But the first thing to know is you don't need to panic. Let's talk about what you should do next. So, is it even worth appealing? You might be surprised. The first thing you need to know is that you absolutely have the right to challenge these things. And you know what? It's far from a lost cause. In fact, for appeals where the AI has simply gotten the wrong end of the stick, what we call an algorithmic misinterpretation, the success rate is around 35%. That's a pretty significant number, and it just goes to show that challenging these decisions is a totally viable option. Now, you might be wondering, why are these letters suddenly becoming so common? Well, it all comes down to HMRC's incredibly powerful AI system, which is known as Connect. By 2026, it's the engine driving a massive 3/4 of all compliance checks. How does it work? Well, it systematically sifts through enormous amounts of information from over 30 different places. We're talking bank records, Airbnb transactions, eBay sales reports, and yes, even your social media profiles, all to find patterns and discrepancies that a human might otherwise miss. So what is this AI actually looking for? Well, here are some of the most common red flags. A classic one is a mismatch between the lifestyle you're showing off on social media and your declared income. You know, those holiday photos that just don't seem to line up with your earnings report. Directors' loan accounts are another huge one for HMRC. The system is also really alert to patterns, like if you're repeatedly late with payments or you make some unusual VAT repayment claims. And crucially, the AI doesn't always get the nuances of freelance life, so if your income has sharp peaks and troughs, that can also raise a flag. Okay, so you've gotten the notice, and you suspect it might be because of one of those triggers. The most important message we can give you is, do not panic. There's a clear legal framework in place, one that's been updated for this new era of AI, and it gives you very specific rights and protections. So let's take a look at what's changed. The absolute cornerstone of your rights is this bit of legislation, the Data Use and Access Act 2025, or DUA for short. It officially came into force on the 5th of February 2026, and it completely changes the game for any significant decision made about you by an automated system. And that absolutely includes a tax assessment from HMRC. It's all about making sure the process is fair and that you can actually contest it. And this is a really big deal. It's a fundamental shift in how the law looks at this. Before 2026, decisions made only by a machine were generally not allowed. But the new rules have flipped this on its head. Now, automated decisions are permitted, but, and this is the crucial part, only if there are robust safeguards built into the process to protect you, the taxpayer. The whole focus has shifted from banning the technology to controlling it. And here we have the most important of all those safeguards. The law explicitly requires what it calls meaningful human involvement. Now, this isn't just some token gesture. It means an AI's output can be a tool to inform an HMRC officer, but it absolutely cannot replace their professional judgment. A real person with the authority to actually override the AI has to review the case. We're still waiting to see exactly how the courts define meaningful, but one thing is for sure, a simple rubber stamping exercise just won't cut it. Right, so you know your rights. Now let's get practical. Here is the step-by-step process for launching an internal appeal with HMRC, but you really need to be aware of one crucial thing right from the very start. And it's this number, 30. You have a critical 30-day window from the date that's printed on the decision letter to formally let HMRC know that you intend to appeal. This is a very strict deadline. If you miss this, you could seriously limit your options down the line, so acting quickly is absolutely essential. Okay, so what should you actually do within that 30-day window? Here are your first 3 actions. First, within 15 days, just send a very brief holding response to acknowledge you've received the notice. This just shows you're cooperating. Second, and this is so important, you need to formally request human intervention. You should explicitly state that you are exercising your right under the DUIA 2025. And third, start building your reasonable excuse files straight away. This is your evidence backstory. It's not about making emotional pleas, but about giving a factual reason for an error, maybe something like a family bereavement, a serious illness, or a genuine system failure that stopped you from meeting an obligation.
Here's a little professional tip that can make a huge difference. When you write to HMRC, try using simple analogies. Remember, the HMRC officer reviewing your case is a person, not a machine. Explaining a financial anomaly in relatable terms, like the example you see on the screen, can be incredibly effective. It really helps to humanize the data and can make complex business situations much clearer to them. This timeline here gives you a really clear map of the internal process. Your formal appeal, which is often on a form called SA 370, or it can just be a letter, has to be lodged by that day 30 deadline. After that, you can usually expect an HMRC officer to do an initial review within about 45 days. Now, if that doesn't resolve the issue, don't despair. You then get another 30 days to request what's called a statutory internal review. This is carried out by a completely different independent team within HMRC, and they aim to get that review done within another 45 days.
So, what happens if you've been through the whole internal HMRC process, you've had that statutory review, and they've still upheld the original decision? What happens next? Is that the end of the road? No, not at all.
This is where we move to the next level, escalating your appeal to the first-tier tribunal. And this is a really crucial step because you are no longer just dealing with HMRC. You are now taking your case to an independent court that specializes in tax matters. Now, I know going to a tribunal can seem pretty daunting, but have a look at these figures for 2026. They're quite revealing. The success rate for taxpayers in standard appeals sits at around 22%. But for appeals where an AI's misinterpretation is a key factor, that rate actually climbs to 28%. This really shows that when an algorithm's logic is at the heart of a dispute, independent judges are very willing to look closely at the evidence and often rule in favor of the taxpayer. And here's something really important to understand about the tribunal. It is completely 100% independent of HMRC. A tribunal judge is not bound by HMRC's internal guidance or their manuals. Their decisions are based purely on tax law and the evidence that's presented to them. They have the full authority to completely cancel or reduce a tax assessment or a penalty, right down to zero. This is such a fundamental safeguard that ensures HMRC doesn't get to be the judge in its own case.
Whew, we've covered a lot of ground there, from what the AI is looking for, to your legal rights and the whole appeals process. So let's bring it all together into a clear summary of what you really need to remember and what you need to do.
The most crucial thing is to have a clear plan. So think of this as your final checklist. First, act fast. That 30-day deadline is everything. Second, document everything, right from day one. Third, explicitly request a human review. It is your legal right. Fourth, be clear and factual with your evidence. And finally, really consider seeking professional advice. An expert can guide you through this whole process and can significantly increase your chances of success. Now, it's really important that we state the following. This explainer provides general guidance on UK tax rules. Of course, every individual's circumstances are different, and you should always get professional advice that's tailored to your specific situation before you make any financial decisions. So if you're facing an HMRC compliance check or you just want to make sure your tax affairs are in perfect order, please feel free to contact the experts who prepared this explainer. For personalized advice, just get in touch with us here at Fairview Accounting Services. The contact details are on your screen now. We really hope this has given you the clarity and the confidence to understand and, if you need to, challenge an AI-flagged decision from HMRC. If you found this useful and you want more clear, no-nonsense tax explainers just like this one, make sure to follow Fairview Accounting Services for all our future updates. Thank you so much for watching.